What's going on? It's Luke with the Common Investor here, bringing you another video. Today's video, I'm going to be discussing what's inside of my M1 Finance portfolio. I recently made an update. I made an addition to the portfolio since the last time we last looked at this. And I kind of want to dive a little bit more in depth about my strategy and my long-term vision for this portfolio and kind of where I see and want this portfolio to go. So if this is your first time checking out the channel, feel free to drop a subscribe and feel free to like the video, and we'll get right into it. So getting right into the video here, this is my all-time chart. So a little backstory to the portfolio. I actually had a different strategy when I first started M1 in August. I invested in a lot of different companies, kind of just had my toe dipped in a little bit of everything. And then right about November, right around here, I switched it up and I invested into 4 ETFs and kind of completely changed the direction and kind of how I thought about M1. Thought of it more of as a long-term investing vehicle rather than kind of my swing trading strategy, which I do in my Robinhood portfolio, which I'll leave a card up there. You can check out my Robinhood investing strategy, um, which is a little bit more active, and this is a little bit more passive investing. So right about November, December timeframe, I completely changed it, and then December 24th, that was basically the bottom of what we had, the little correction we had in the market there. I dropped in a big amount of capital there, increased the portfolio to about $400, and then since then I've been dropping in $10 every single week, and recently just upped that to $20. And then I'll talk about this little blip here. I had a good influx in there today actually with my recent addition, which we'll get into it. So kind of change it up. Don't really want everything that I invest into this portfolio. I don't want to touch it ever really. I want to just leave it in there until it comes time for me to retire. So obviously I want to retire early. At work I have a Roth 401k, so can't really get into that until I'm 59 and a half years old without taking a penalty. So if I want to retire earlier than that, I'm going to need some sort of capital coming in, and kind of this is what I'm using that for. So currently we're doing $20 every single week. Obviously want to be getting that to $10 every single day. The $20 every week is $10 Monday, $10 Wednesday. Obviously I want to do $10 all 5 days and then kind of just up it from there. So kind of just diving right into what I have in the fund as of right now. Something that I've just been buying pretty consistently is SPHD. And here, I'll get into the reasons why. I'll just kind of briefly go over. So then we have QQQ, that's the NASDAQ tracker. We have SPY, it's tracking the S&P 500. VTI, Vanguard's total stock market. And then we have our only individual holding, which is KO Coca-Cola, which was just added today. So I added $50 into that today. Obviously down a little bit, but that's it in the long term, that's nothing. So getting back to SPHD, I've been just investing in them a lot. As you can see, the target's well over what the actual percentage is. Definitely been investing in them in a whole lot. So if you don't know what SPHD is, they are the Invesco's S&P 500 high dividend, low volatility. So they take the S&P 500 75 highest dividend payers. They take the 50 least volatile of those 75, and that's the fund. So the thing I like about SPHD the most is the monthly payouts. So it pays a dividend every single month. Recently just got a payment from them about 40 cents. I don't have much in it, obviously. As you can see, I was dumping in $10 into the entire fund every week, and then I've just been dumping $10 into it every single week, and that's kind of where this has been going. Kind of getting back to where we were before. Reason I'm investing heavily into SPHD is because I want a lot more dividends. As of right now, we're kind of at the highest point that the stock market has ever been, and maybe in the next few years, maybe the next 5 years, we have a downturn. If that is to occur, I really want dividends and income flowing into this portfolio to boost the QQQ, the SPY, and the total stock market, um, boost that portfolio pieces up and kind of hold that for the long term. So I'm planning to hold this till I'm at least 50. So that is um, about 30 years away for me, a little less than 30 years. Um, so we'll see. My goal is to not touch this no matter what. No matter what happens, I don't want to touch any of this. Um, and so the reason I added Coca-Cola here today is because kind of thinking what's going to be around when I am 50 years old. So what's going to be around in the next few decades? What's kind of tried and true. I don't have any tech in here really. Obviously, the QQQ um, is in here for Nasdaq, the tech heavy, but that is a ETF. So that's going to be managed actively throughout my time of holding it. So holding ETFs is definitely great for the strategy I have going on in my M1 Finance portfolio. Um, but thinking of what's going to be around, Coca-Cola, I'm almost certain it's going to be around for decades to come. I know a lot of people say, "Oh, people aren't drinking soft drinks anymore," and yada yada. But I mean, at the the bottom line is that Coca-Cola isn't just Coke. They own a variety of different beverages. They own water. So the the thinking that because soft drinks are going away, which I don't think they are, it doesn't matter because they have juices, they have water, they have whatever you can think of. They you name it, they have it. So kind of reason I picked them is they are a dividend aristocrat. They might be a dividend king. I'm pretty sure they probably are. But they have a nice dividend of 3.5% payout every quarter, and they are just a consistent grower. I wouldn't say a grower, but consistent dividend grower for sure. And they're not very volatile at all. They kind of just chug along, give you your dividend, and you're good to go. I was actually just reading an article there the other day that Coca-Cola has actually returned 85% if you account for reinvested dividends in the past 3 years. So that's a great return um, for such a low volatility stock like Coca-Cola. So I guess my thinking for now is, as we keep climbing in this bull market, I'm going to keep investing into SPHD and Coca-Cola. So right now, as I said, I'm investing $20 a week into this portfolio. So I'll probably do 10 into SPHD, 10 into Coca-Cola for now, and keep that chugging along. Coca-Cola will be going ex-dividend next week, I believe, the 14th. So I should be getting a dividend payment through them. I have a little over one share, as you saw there. Now in SPHD, let me get into kind of what I own for that. I actually own 4.3 shares. They give out, it's usually a range between 14 to 16 cents every single month. So getting that monthly income coming in is really what attracts me to this ETF and to this fund, and something that I'm going to keep just pouring money into until the time comes. Obviously, there's an expense ratio, 0.3%, but hey, the dividend's 4% and it pays out monthly, so really not eating into it too bad. If we think of it as the 0.3% to the dividend yield, we're looking at a 3.7% dividend instead of a 4. That's fine by me. They pay out every month, and that's really kind of what I look for. Um, so that's kind of the thinking, the theory behind this portfolio. As you can see, the big influx of cash there, and kind of we're just kind of going up. Um, M1 Finance does their percent return based on your cost basis, so a little bit funky in that sense. I know Robinhood, if you put money into it, it's not going to show that you just had a great return because you added money. So I'd like to kind of see them do that there in the future. But if we look at the gain here for the portfolio, earned about $1.78 in dividends, and then just almost $30 in market gains. Now, you might be asking yourself, am I going to be adding any more individual positions or ETFs to this portfolio? I'm thinking for right now, I'm good with what I have, and I really like SPHG and KO Coca-Cola, and I'm trying to trying to look for what's going to be there in the long term that has a nice dividend for right now. Um, right now, I'm just going to be investing in, if I'm going to invest in an individual company, I'm going to be investing in dividend payers for now, since we're at all-time highs in the market. If we were to go through, a market downturn or a recession, then I would take a look at ones that may not have any dividends. But for now, I'm really focused on the dividend payers and kind of just doing as average as I can, really, just to preserve this capital for me to retire early. So, getting into what I'm watching, I made a little bit of a watch list here. I included a couple of monthly dividend payers, as well as some blue chip companies. So I'll move my face over here, so you can kind of see the different funds I have here. So as you can see, I have a couple of REITs. REITs are really great for dividends. They're required to pay 90% of their profits to shareholders. So REITs, that's why they usually have that high dividend yield. So the different REITs I have in here are Apple Hospitality, LTC, Main Street Capital, Prospect Capital, and O Realty Income. My favorite of these is O Realty Income. They are a dividend aristocrat. They've been paying out their dividend consistently for the past um, quite a few years, and as you can see, that's a nice dividend yield there. They're also a monthly dividend payer, which is something I really love. Um, and this will be something that, this would probably be the next individual stock that I add to the portfolio there. And reason being is because they pay out that monthly dividend. They're a high payer, and they have a consistent track record. Reason I'm not adding them now is because if you look at this past year chart, we're up 36%. They've been on an absolute tear. Um, and as you can see, they're pretty flat. Well, obviously minus this tear that they've been on for the past 3 years. Um, but if we look at the 5 year, they are still steadily growing. So they are growing. They're not just staying flat and giving you the dividend. They are paying you out. And as you can see, they've been increasing it. So 5 years ago, we had about 18 cents. Today, you're looking at 23 cents. So they're consistently growing that dividend. You're increasing the amount that's coming in as income into that portfolio. And they're also growing with capital appreciation. So I think this would probably be the next one that I add to my M1 Finance portfolio there for the strategy I have going on right now. But for right now, they're a little too overvalued in my opinion. So I'm going to keep an eye on them, and we'll definitely add them there at the right time when the right time comes. And that's really the one I'll add for the most part as a REIT. A couple of other ones I had were AT&T, AbbVie, Procter and Gamble, and Waste Management. So Procter and Gamble, Waste Management, definitely great blue chip companies. As I been saying, they are dividend aristocrats. Pretty sure these guys are dividend kings as well. They are tried and true companies, and definitely something that I'm going to keep my eye on. Their dividend really isn't as high as I'd like them to. With Coke we had an over 3%. With Waste Management, it's just 2%. Something I'll keep my eye on. Not going to plan on investing in that as of right now. Maybe if we had a market downturn, I'd sink some money in there. And these are the ones that I think that'll be around for the next few decades. AT&T, something that I definitely probably will add as well, as long as I can keep that dividend yield where it is and they don't cut it. As you can see, the past year they've been suffering, but and even the past 3 years. But you can kind of see that 5 year chart. They had a nice influx, and then they've kind of been steadily going down. So I'm not sure if they can keep their dividend of almost 7% going. They do pay out once a quarter, I believe, and they have a really nice attractive dividend. As you can see, they've been just increasing it, and I think they just increased it this last one. Yeah, 50 to 51 cents. So pretty sly move on AT&T. Even though they're down, they're still increasing that dividend. So I'm going to definitely be watching them. Something that I definitely want to add to the portfolio kind of when the time comes. And then the last one I'll get into is AbbVie. AbbVie is a drug company. And they've been paying out very consistently, and they've had a really nice run up there. So we got about a 5.5% dividend yield as right now. So 51 cents there every quarter. back 5 years ago, and now they're over $1. So they've increased that dividend significantly, and kind of going to keep my eye on them. And if we go back to the watch list, I think kind of the order that I'll probably add these in. Um, I'll keep my eye on O. Obviously, I think they're a little overvalued as of right now, but I love that they have that monthly dividend coming in to the portfolio, and it's nice and high. And gonna definitely keep my eye on it, like I said. And then AT&T, I'll keep my eye on that as well. I think if a market downturn were to occur, I'd probably add Procter & Gamble and Waste Management, and then a lot of these other REITs, and then AbbVie would be another market downturner. But all the other REITs, kind of gonna have to keep my eye on these as well. They're kind of risky in my opinion. So kind of just depends if I'm looking to add those or not, and I'm not even sure if they'd be around in the next few decades. But other than that, that's kind of my thinking and my theory behind the portfolio that I have here. So to go through it one last time, we have SPHD, QQQ, SPY, VTI, and KO Coca-Cola, which is the one I just added there today. And the strategy is going to stay the same. So $20 a week for now, and then hopefully I can add that to be $10 every single market day, and we'll keep it going. So so with that being said, I'll leave it at that. Let me know what you think in the comment section below. Do you agree with the strategy I have? Do you think it's weird, or kind of what do you think? What's your portfolio strategy for M1 Finance? And as always, if you haven't already, feel free to subscribe and smash that like button. And we'll see you in the next video. Thanks, guys.